In illustration number 7, we are supposed to prepare furniture account and provision for depreciation account for the year March 31st, 2016 only. On 1st April 2015, following balances appeared in the books of Mrs. Kanishka Traders. Furniture account 50, provision for depreciation on furniture being 22. So already there is a balance. In furniture account, the opening balance on 1st April 15 being, okay, two balance brought down being 50,000. By the same date, we have the provision for depreciation also 1/4/15 by balance brought down. The value being 50,000. 22,000 rupees. 22,000. Okay. Provision for depreciation on furniture. Okay. On October 1, 2015, a part of furniture purchased for rupees 20,000 on April 1, 2011. Okay. Part of furniture on October 1, 2015, a part of furniture which is purchased for rupees 20,000 in April 1, 2011 was sold for rupees 5,000. Sometimes earlier on 1/4/11, an asset purchased for 20, okay, 20 is sold in which date? On 1st October. On 1st October it is sold. Now, what could have been the provision for depreciation for this asset? If the rate of depreciation here being 10% per annum, apply the same rate year after year. For the year 11 and 12, the depreciation being 10% on this, 2,000 rupees. What sort of depreciation? 10% per annum on original cost. So SLM method of depreciation to be followed. And automatically after this, the value being 18,000 rupees. This is the balance as on 31/3/2012, which is called as WDV, written down value. Written down value is nothing but the value of the asset after the depreciation. Again, for the 12 and 13, we might have provided depreciation for this under the same value, rupees 2,000, as it's the original cost. From the original cost only we have to calculate. Now the WDV being 16,000 rupees on which date? 31/3/13 WDV. Again, 13 and 14, depreciation here being 2,000 rupees. Today it's worth rupees 14,000, and this is nothing but WDV on 31/3/14. WDV on that date. And 14 and 15, another 2,000 is subtracted, then this value being 12,000. So the WDV of this asset on 31/3/2015 being 12,000 by this time for this current year. And this asset is going to be sold on which date? 1st October, right? So on 1st October it is going to be sold. So up to the date we have to calculate the depreciation. So up to 1st October 15. So 20,000 rupees is the value of the asset, and rate of depreciation being 10%, and the number of months eligible for depreciation is up to 1st October, 6 months, 6 or 7, 6 months. So into 6/12, then the value being 1,000 rupees. Half year is over. After that, the WDV as on the date of sale being 11,000. WDV as on the date of sale is 11,000, but was sold for how much? Was sold for 5,000 rupees. Okay. Now sale value on the date. Sale value on the date being 5,000 rupees. 11,000 but sold for 5,000. What does it mean? The difference between these two is loss. Loss is how much? 6,000 being the loss. Is that okay? Loss on sale. Loss on sale. Now, how much of accumulated depreciation on this asset as on this date of sale? 9,000 rupees is the accumulated depreciation as on the date of sale. Is that clear? Now I am going to incorporate all these things in this account. Let's see here. We have to pass the journal entry for this, right? For the current year. We are going to work out for year 2015 and 16. In that year, we have to first pass the entry for what? This depreciation. The entry being depreciation account debit to provision for depreciation. Provision for depreciation. So, on 11015 by depreciation, the value being 1000 rupees. The value being 1000 rupees. Whenever the asset is sold, the accumulated depreciation on the asset sold is transferable from the provision for depreciation to asset account. So here on the same date 11015 to furniture account. What is the value here? 9,000 rupees. 9,000 rupees is going to be transferable from here to furniture account. So on 11015 by provision for depreciation, that provision for depreciation is credited in the furniture account as on the date of sale, and it's an accumulated depreciation of the asset sold since the date of purchase to the date of sale, which is 9,000. And today it gave us a revenue of rupees 5,000, cash inflow of 5,000 rupees, so by bank or cash. This value here being 5,000 rupees, bank. And we face a loss of rupees 6,000, should also be posted here, loss on sale on the same date, 6,000. So we have posted all the three. So whenever there is a sale of an asset, amount collected, and next one will be provision for depreciation model, means any accumulated depreciation on the asset sold will be transferable from the provision to furniture account. Third, is there any profit or loss because of sale? These are the three items you have to keep in your mind. So number one, okay, number one, accumulated depreciation on the asset sold and the amount collected on sale, and third one will be loss on the sale or profit or loss on the sale. So these are the three important points to be kept in your mind. Is that okay? Now, and on the same date, a new furniture costing 25,000 was purchased on the same date. So 11015 on the same date, furniture is purchased, bank. The value of new purchased asset being 25,000, and the depreciation was provided at the rate of 10% per annum on original cost of the asset, and no depreciation was charged on the assets in the year of sale. See, this information I have not seen. Which information? The last one. The assets sold, no. For that, the depreciation on the in the year of sale is not provided. In the year of sale is not provided. Okay. Prepare furniture account and all as usual. As per this instruction, you no need to provide the depreciation for the year. Okay, for the year in which the sale happened. If you don't provide the depreciation, then automatically WDV being 12,000 sold for 5,000 rupees. And the difference between these two is loss. And then the accumulated depreciation, as it is not there, it is 8,000 rupees. Only small change. Only small change. Here, accumulated depreciation or the provision for depreciation on asset sold transferred being 8,000 rupees, because this 1,000 is not provided. You are subtracting 1,000 rupees in the credit side as well as in debit side parallelly. And here this one. And this impact will be in loss on sale of asset. Is that okay? This impact will be automatically in the loss on sale of assets. Either you may show that as a depreciation, or anyhow it may get adjusted as loss on sale. In both the way we can work out. The first model what I have solved, no, that's the usual one if nothing stated. But in this illustration clearly stated, in the year of sale for the asset sold, no depreciation is provided. So in that assumption, I don't create any depreciation date. Is that okay? Rest of the things are the same. Now create the depreciation. This is not there. In the year end 31st March 2016, we have to create the depreciation. The depreciation for the one of the assets. Actually 50,000 rupees worth of assets we have, out of which 20,000 rupees worth of assets sold. So only balance 30,000 rupees worth of assets we have. For that 10% depreciation will be provided, 3,000. Not only that, we have purchased one new asset for rupees 25,000. for the 10 percentage, but this new asset is purchased only on 1st October. So from the 1st October to 31st March, we have only half year. So this is eligible for half year's depreciation only, right? What is a half year's depreciation here? 1,250. Am I right? So 1,250. So the overall depreciation charged here being 4,250 here. Now, if I tally the furniture account, the balance as on the date 31st March 2016 by balance carried on, the value being 55,000 rupees. You can cross verify. How do I get that 55 straight away? Out of 50, 20,000 worth assets sold, so 30 will be there. New asset being 25, so 30 plus 25, definitely there should be 55. Anyhow, you have to cross check. So 75,000 in the debit side and tally this and find out the balance. If I tally and get the balance, you will get the same 55,000 rupees. Is that okay? Yeah, of course it's matching. Anyhow, you have to guess it side by side. Now, when it comes to the provision for depreciation for the year end, okay, 31st March 2016, balance carried on. How much we have the provision for depreciation to be carried forward the next year? So here the total being 26,250, 26,250. Here 26,250, and if I subtract the 8,000 rupees, the balance being 18,250. 18,250. Okay, rewrite in the opposite side. Is that clear? So illustration number 7 is over.